Hello, my name is Steve Bigelow with the Candlestick Forum. One of the most compelling confirmations of a trend is the T-line. We call this the T-line rule. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line, or the further away you move from the T-line, the higher the probability it's going to come back up and test it. So today, we weren't going to jump out of short positions, even though the market was up pretty strong, because as long as this downtrend is in progress, the probabilities are the bearish sentiment is still in control. We saw that in the same analysis over here on the Nasdaq. That big sell signal, again, a couple of the factors that work very well with candlestick analysis. There's your doji in the overbought condition. The doji rule says it's going to move in the direction of how they open after a doji. The bigger this signal, the more compelling there's been a change of investor sentiment. This is not rocket science. This is just merely analyzing what the Japanese rice traders have illustrated for us over hundreds of years, that investor sentiment works the same way time after time. So even though the Nasdaq was trading up pretty strong today, nothing yet has told us that this downtrend is not in progress. So with this element, that if we know the overall trend in the market, we basically want to go with the flow. We want to find the signals and patterns. As you can see, the bearish engulfing signal here on Boeing. Now the bearish J-hook pattern with the gap down. More downside in wave 3 of the J-hook pattern. Doji, indecision, gap down on BTAI. Just merely stay short until you see a buy signal, which probably won't come until you see stochastics get in the oversold area. Same scenario on our recommendation to go short on Bosch, BHC. Spinning top, failure right here at the 50, gap down through the T-line. Breaking this level now tells us likely we're going to be heading in this direction. So we've had some very good long positions, but here's how you kind of keep your emotions out of your trading. Just the simple logic of when you're starting to see indecision, that it's time to take profits. Now, not only was it time to take profits, excuse me, but after doji, indecision, couldn't get up into a new high, a bearish engulfing signal was kind of the final nail in the coffin, that this was where the bears were starting to take control. A doji type day today makes it very simple. If this opens lower tomorrow, now we're confirming a bearish doji sandwich. They could be coming back to any of the support levels. As long as the indexes stay below the T-line, especially when they come below the T-line, everybody's orientation should be getting out of long positions and going short. That's what puts you in the right direction at the right time. We're going to be doing a training session this Saturday on how to keep your emotions out of your trading based upon just knowing what the signals are telling you and knowing that there's going to be a high probability that they're going to move in the direction that they indicate. So come join us. If you know how to analyze charts, the last bugaboo that most people have as far as investing correctly is getting their emotions out of the way. That'll be it. We'll see you in the chat rooms.